Okay.
Okay. Okay. Bonjour, bon dia, buenos dias. Good morning, or to all those who are joining us. This is going to be so we're doing the webcast today on Novas New Perspectives. It's going to be in English, but you can send in your questions in any language. I've been told that our presenters can speak any language that you like, so just feel free to send in your questions in Spanish or Portuguese or French or even English. Just let you know, this session is being recorded. The recording will be sent to you by email afterwards. You can ask questions throughout the event, so feel free to. It's interactive. Feel free to send in your questions, and then you can also follow us on social media in terms of seeing what the future events that we're going to have. And the most important thing is that whoever asks the most questions gets chocolate. I'm just hoping the person is going to be in Brazil today. Although I was thinking about the logistics of sending chocolate to other places, but we maintain our tradition of sending chocolate to the person who asks most questions. So just so you know that this is it's part of our New Perspectives training program. It's completely free, completely open, zero carbon. Everyone who participates, if you're with us for at least 1.5 hours, you're going to receive a certificate. And then for those people who want a formal training, CRC recognized, have to do the test at the end. You have to get at least 3 out of the 4 questions correctly. Are the speakers we have with us today are Guilaine. Guilaine, do you want to introduce yourself?
Sure, thank you. Obrigado, first of all, Kieran, and thank you very much for PwC Brazil for hosting us. I wish I was there in person in Brazil. I love the trip usually around that time, but maybe one of those days. So I'm Guilaine Saroul. I'm a managing director in our PwC US national office, and I focus on foreign private issuers, mostly the ones reporting under IFRS from many different regions of the world. So very likely I've been working with many of you. And I'm as well the PwC representative for the IPTF, the International Practice Task Force. That means twice or 3 times a year with the other firm and the SEC. And I'm very happy to be here and looking forward for great conversations on FPI updates.
Okay, great. Thanks very much, Guilaine. And then we have Jonathan. Jonathan is joining us today, and he is even wearing a shirt so that people can recognize him from the photograph that we have here. That I suspect maybe Photoshop.
Yes. Hi, everybody. I'm Jonathan Odom. I'm a partner in our national office here in the U.S., specifically in our SEC services group. I work with a lot of foreign private issuers around the world. So I think I counted 4 different continents. So only Africa and Antarctica, I think, are the only ones that I haven't touched, and pretty sure we don't have any clients in Antarctica. So happy to be here. Obviously, I wish we could have been in person, but grateful that we're able to expand who can join to multiple countries here. So look forward to questions, and happy to be here.
Great, thanks very much, Jonathan. And Manuel Pereyra.
Yes, good morning, Kieran. Good morning, everyone. And thank you very much for the invite. My name is Manuel Pereyra. I'm a director in the assurance practice in PwC Canada. I'm also an assurance partner from PwC Venezuela. I'm also a director in the Americas PCOB Center of Excellence and the American Assurance Transformation Group. I've been working with PwC for the past 24 years, and I've been supporting multinational clients in Venezuela, UK, and Canada. So happy to be here and looking forward to your questions and for this session.
Okay, that's great. Thanks very much, Manuel. So let's just go through some logistics here for We'll start. So our agenda for today is, so we're going to have Guilaine and Jonathan and Manuel talking to us, and at the end we're going to have so it's a two-hour session. At the end we're going to have we finish in 2 hours, and then we have the test for local Brazilians CRC purposes. The main themes we're going to discuss: the SEC administration updates, regulatory changes impacting FPIs, ESG, which is quite a big deal, and cybersecurity, SEC comment letters, and current audit challenges, and the future of the audit. I guess just let you know, the PwC now, the concept we're working on is the new equation, and our focus is to solve issues and consider ourselves a community of solvers. The other thing is September is Suicide Prevention Month, Awareness Month, and just to remind everyone of that. The next week we have our traditional quarterly closing, whereby we're going to discuss it's going to session in Portuguese. We're going to discuss the quarterly closing issues that we have, and the impacts of that, and the various, I guess, accounting and tax impacts that we have for the quarter close. On publications, you should have a on your screens. You should have a tab which you can download the presentation that you're currently seeing, and you also should have a tab whereby you can access these publications. There's quite a lot of publications. I'm just going to go through these briefly, but as I said, on your tab you can access these. So I guess the first here was an SEC sample letter to companies on climate change disclosures. The SEC sent a number of comment letters on climate change. We have listing in the US, roadmap to IPO in the US, PwC comment analysis of PwC of the SEC comment letter trends. We have the quarter close. We have SEC sustainability reporting. All of this information is free, so you can click on it and you can download it directly from your device. Except for me, I think for one, the PwC podcasts on SEC and including SEC reporting topics. We have the PwC IFRS podcast, which is 116 in total. We have the SE volume. That's the only one that requires a Viewpoint subscription. And then we have the PwC in depth on rules pertaining to significant acquisitions and dispositions that changed this year. We have the PwC in depth on updates to Guide 3, which is something we're going to touch on. We also have the PwC in depth on changes to MD&A, which is another topic we're going to be discussing. We have the publication of Blair Shepherd of 10 Years to Midnight, which is linked to the implication of how our world is changing, what needs to be done. And finally, we have another publication on don't wait till the SEC asks you about climate change. I guess getting yourself prepared. So in addition to the first one, which was on the sample letter, we also have the publication here of PwC in terms of getting ready for questions on climate change, as this is that's one of the focus points. And then obviously you can follow us on social media. I think everyone that's presenting here, we connected whenever we showed the slides. You have the connection to everyone's LinkedIn, and also PwC Brazil. We're on LinkedIn, Twitter, YouTube, and we have the YouTube channel for for these trainings, Novas Perspectivas, that they're all recorded and publicly available. Now let's get started with our warm up on the initial survey. So, okay, whenever you want. Okay, so I guess the first question here is: do you receive PwC PCOB communications? And then there's a number of different types of PCOB communications. We have information for preparers, for investors, for audit committees, for auditors, and so you should see on your screen the survey popping up, and then you can just choose one of the options. we have the staff publications, news releases, and statements. Don't receive or don't know. So the PCOB, they have a website. They have a lot of information available, like for different types, for preparers, investors, audit committees, auditors, staff publications. I guess the idea. So we have actually the most popular one is here. We don't receive. So quite a few people here don't receive the PCOB publications, but on the other hand, is like all of the others are people do receive it in some way. All of the others. So Manuel's going to talk to us later about some of the issues on a PCOB standpoint. Obviously, all of the companies listed with the US, they're subject to PCOB audits, and it's important to understand what the rules are for the auditors. So I guess that you should be seeing that. I guess everyone should be receiving the results of the survey there, and then as that's so on. I guess on the PCOB side, because it's although I guess they are the regulator for the auditors, they do send information for preparers and for investors and for audit committees, and it's interesting that relatively few receive this, despite the fact they do have publications specifically for these groups. And I guess just closed this first one, and so we go to the second one. So you should be receiving the second survey in terms of, do you receive SEC communications? So here we have in terms of the SEC communications. So we have I guess there's a list here, like the SEC quarterly update webcast by the AICPA, the SEC's Dear CFO letters, the SEC news, like press releases, statements, or don't receive or don't know. And then, so quite a few here, I guess based on the numbers coming in here, we have quite a few that don't receive the SEC communications, and then others, I guess we have it is from various times. So, but there is a lot of information. I guess there is a lot of information that's made available, and if you just go into the SEC website, you can sign yourself up to receive this this information. So it's quite a lot of information made available to the public. And I think we're just waiting for the survey to end here. And then as I say, like so for those that are watching us, this is recorded. It will be sent to you. The link of the recording will be sent to you. Everyone who spends at least 1.5 hours of the 2 hours with us automatically get a certificate of participation. And also on your computer screens, you should be able to see that there's you should be able to access both the presentation and also all of the publications that we just showed. And I guess for those people who just joined us, just so as we do send chocolate to whoever asks the most questions. So, so please feel free. It's interactive. We like to receive questions, so please feel free to send your questions in. And then I guess on the third one, so other than the SEC and PCOB publications, I guess where do you get your regulatory updates from? So I guess here in terms of companies listed in the US, where would they expect to get their updates from? Like, because obviously you have the SEC website, the PCOB website, and then other than that, would you get it from you have a US counsel involved in terms of normally help out with with putting together the annual 20F. You have the auditor. Many have consultants, websites, internal communications, or others. So there's quite a few here got internal communications. So I guess hopefully the companies have like a knowledge broker and who accesses all of these sites, and then they make available internally the information that's most important. Quite a lot of information, I guess, get information from the auditor. I guess PwC is an auditor, and what we're trying to do is here cover the principal issues of the for the 2021 year in terms of those companies, foreign companies that I guess those foreign private issuers, but I guess 20Fs and 40Fs. And so now we're in 4. So do you consider the companies prepared for the current changes in regulations and standards? So I guess this year in particular, there's quite a few changes to regulations and standards. And then the question is if you're ready, I guess, the changes in HB 20F and 40F, the changes in the Banking Information Guide 3, changes to Mining Information Guide 7, changes to the significance tests, like for significant acquisitions and dispositions, other SEC changes in PCOB, the new accounting standards, or not ready at all, or don't know. So we're going to go through a lot of changes, I guess, from the MD&A, which impacts the annual registration statement, 20F, 40F, the Guide 3 for banking information, Guide 7 for mining information, the significance tests that changed, the other SEC changes, I guess the PCOB changes, new IFRS, or not ready. So here we've got quite a bit of scattering in terms of the replies. I guess, but there again, it's quite. So most are ready for new IFRSs for the accounting side, but in terms of when you start discussing the annual registration statement, you'll get many less, I guess, for the changes in the registration statement. I guess maybe there's fewer entities that are subject to Guide 3 and Guide 7, but we have relatively few in the significance test, but we have quite a few as well that don't know or are not ready. So hopefully those, hopefully for that group, I guess both in the publications, because we have publication, I said, so we have publications on the change in the MD&A, on the change in Guide 3, Guide 7, significance tests, and other changes. So hopefully the publications we made available will help you in terms of accessing that information. Now, guys, on to the 5th one, what do you consider to be the greatest challenges for an FPI? I guess here, what do you consider to be the greatest challenges as a foreign private issuer? The preparation of timely and high quality financial statements, internal control over financial reporting, ICFR disclosure controls and procedures, keeping up with the regulation, initial registration, deregistration, cultural aspects, no significant challenges. And it's interesting, the replies we're starting to get replies in here. So so we have, I guess, the most popular ones here: preparation of timely, high quality financial statements, internal control over financial reporting, and also keeping up with the regulation. So disclosure controls and procedures is less of a concern. I guess initial registration, deregistration, I guess we have relatively few in that bucket, but quite a few recognize that the cultural aspects in terms of the challenges of cultural aspects of being a foreign private registrant and subject to US regulation. We're on 6. I guess what area would you like to learn more about? So in this case, the So in terms of, which area would you like more information on, like foreign private issuer, audit committee obligations, preparer obligations, changes in regulation, SEC comment letters, SOX requirements, common FPI issues, transparency for FPIs, cybersecurity, and ESG for FPIs. So we have on this, I guess we have people, we have participants, I guess, in almost every area. So this is the one that we have people indicating almost everyone in this list. And I guess we're going to touch on, on most of these subjects today. So that's going to be good. And hopefully as well, the links to the publications, almost all of them are free, and you can go ahead and download those and make those available to your teams internally. So I guess with that, but it's interesting to see like the level of demand on that. And then we're just on the last question survey. Where do you live? I'm hoping here, by virtue of the fact that we're going to have to send chocolate here, that most are coming from Brazil. Let's see where people are from. So the I guess we have Canada, United States, Brazil, Latin America, Europe, Asia, Africa, or the rest of the world. And I guess we have most from Brazil, but we also have Canada, United States, Latin America, Europe. So we have a group of people from across the various, across the various regions. And I'm guessing with that, I guess we can return to our presentation, and then I guess I'll pass it over to Guilaine and Jonathan to start the presentation for us.
Thank you so much, Kieran. And I'm ready for the chocolate. As I mentioned, I like to come to Brazil. I always get a full bag here. And I should have shared before. Actually, I have on my desk every day. I can look at a tree, a beautiful palm tree from Brazil. So we can talk about trees as well a little later. But with that, it was a lot of publications that you listed out here. And so we are going to try in the next 30 minutes for a presentation piece of it, of the webcast here, to give you a quick summary and download of all this information and the few items to focus on. So we'll give you an update, few reminders from an SEC US perspective. First of all, maybe on that first slide here from our presentation, you can see that we have a lot of volume, right? So you can see it's a very high volume of transactions in the US market, and the trend has continued to be at record level for the SPAC and traditional IPO. So if we just look at the half year of 2021, we already noted 552 IPOs, and they raised more than $178 billion. This included approximately 50 FPIs. And so as you can see on that chart, right? So the volumes are very significant, and they increase even more. In our own group, just to give you a perspective here at PwC and National Office, we still have a very significant backlog with approximately 100 FPI IPOs in process. So many FPIs as well in there. And the split, which is very interesting as well, is still very much so between 50-50 between US GAAP and IFRS. We have quite a few that are as well from Brazil and South America, but as well Canada and the rest of the world here. So something to really think about, and then it impacts the market, it impacts the timing, and we'll talk about it from a little bit. I'll turn over to Jonathan to give us a little perspective of this new administration and how this volume is, meeting and getting to that new administration and the priorities here.
Great, thanks, Guilaine. Maybe I'll just start with a few points that'll set some context for the rules that are coming out or have come out and where we think the future is going. So I think it's always important to look at the mission of the SEC, which is a balancing act between protecting investors, maintaining fair and orderly markets, and facilitating capital formation. So everything the SEC does is balancing, those three main elements. And before I get into the new administration, it's probably worth just taking a moment and kind of framing where we just came from with the Trump/Clayton SEC administration. So the last administration under Clayton was very prolific with new rules. They updated a number of rules that are now coming into effect, some of which we're going to talk about today, that hadn't been updated in decades. And some, 30, 40 years. And keep in mind, the SEC's been around for less than 100 years. So some of these rules have been around for quite a long time before many of us even started our careers. The Trump administration under Clayton, their focus was on modernizing, streamlining, and making it, trying to balance that investor protection disclosure perspective, with making it easier for companies to be public and stay public in the U.S. One of the key points about the rules that are coming into effect now is under Clayton, many of the rules were very principles-based. So you'll see there's a lot of judgment in, what exactly needs to be presented in some cases. There's still specific rule elements, but you'll see the theme of the principles-based kind of underlying almost all of the new rules to some degree or another. As we look forward to the new administration and now under Gensler, we do expect to see pretty significant changes, and we've already started to see pretty significant changes. And I think, one thing that's worth noting is, the SEC commission has 5 commissioners. It's a majority vote. Whoever's in charge of the White House has the 3 votes. So it's not uncommon to have a 3-2 vote on a lot of issues. It's not uncommon for the party out of power to put out press releases that they disagree with certain things. But for all intents and purposes, those disagreements mean nothing until there's an administrative change. So what do we expect from Gensler? I think if we look back at Gensler's history, right, he was a partner at Goldman Sachs. He understands the markets. He was a regulator he ran the CFTC after the financial crisis. He was a professor at MIT teaching cryptocurrency and other things. So we know he's well-versed in the markets. But we also know from the CFTC time that he is known for being a tough regulator and getting things done. And so, he's already signaled to the market very clearly, to the U.S. government issuers that, he's focused on a number of things. And I think, some of those are quite obvious, and we'll talk about those more, but we expect new rules around climate disclosures. We expect new rules around human capital. We expect new rules around cyber risk management. Those are some of the ones that will impact companies pretty head on. There's also a lot of work around, pay for order flow if you're a brokerage company, crypto activity. So a lot of things are going to be coming here later this year and early into next year. We've also already seen kind of a pickup in enforcement activity, and we expect that to continue. That's a way a new administration can get focus, right, which is enforcement action while they're working on new rules. And I would say if you're involved in an IPO, a SPAC, a D-SPAC, or anything to do with China, you will certainly get a lot of attention from this administration. And I'll also point out that maybe 2 last points just to set the framework. I started with talking about the principles-based framework under the last administration. That principles-based framework the good news is it doesn't tell you exactly what to do. The bad news is it doesn't tell you exactly what to do. And with a new administration comes a new set of referees. So they have a bit of leeway themselves, the SEC, and how they think companies should be interpreting certain of those principles with regards to what should be disclosed in particular. And then I know Manuel's going to talk about the PCAOB and the auditing standards, but it's worth noting that Gensler has already dismissed the entire PCAOB board. There's a couple left keeping the lights on until the new board comes in. But there was a lot of criticism that the PCAOB board was not getting enough done. They weren't tough enough on the auditors, et cetera. And I know Kieran spoke about this, but like a lot of times we talk to companies and they say, well, okay, whatever PCAOB, that's your problem. But trust me, when there's new rules and there's issues, it very quickly becomes the registrant's problems, and you will feel those changes as they work their way through the system. So that's kind of probably a very high level kind of view of where we think things are going, and hopefully that'll filter through the rest of the discussion.
So thank you, Jonathan. So if we move then, as Jonathan just mentioned, one of the key SEC focus is related to the ESG. So as we mentioned above, right, we expect that the SEC is going to release further guidance for each of the areas. So climate change guidance, more guidance on human capital, and more governance and cybersecurity. And in addition, it's more like what we expect here, just based on conversation and what we are seeing is, we expect that in general, there will be a little bit less accommodation for foreign private issuers. So I would definitely recommend here for foreign private issuers to be part of the discussion and watch the space, and then understand what is applicable or not, but again, less accommodation. So if I start with ESG here and climate change, in February of this year, Alison Lee, who was the then acting chair of the SEC, directed the Division of Corporate Finance to increase its focus on the disclosures and companies filing about climate change. And as you may know, there's already some guidance, which is referred as the 2010 guidance, that noted that depending on the circumstances of your company, you should disclose some climate change related risk and opportunities. Some disclosure should be done on the description of the business, how it impacts legal proceedings, risk factors, MD&A, the result of operations. The release outlines certain ways in which the climate change may trigger disclosure under the SEC rules. But no one had paid as much attention as this current administration. And this is the SEC, as I said, is looking to update that guidance, but they have already started to look and demonstrate their focus by issuing some quite a few of the comments, already SEC comments on climate change in the last week or so. So as Kieran mentioned, we gave you a link above on a sample letter. So the SEC actually even released a sample letter of the climate change questions that they have been issuing. And so I definitely recommend every registrant here and engagement team to look at that, to have a sense of the information and the comments that may be coming in that direction. So far, we understand approximately 30 to 40 letters have been already sent out to registrants with some through the targeted reviews they have done. It's across industries, based on what I understand. It's definitely in line with what I just said in the 2010 guidance. So we are not surprised really per se with any of the comments. The comments are really started with the review of mostly 10Ks so far, and they focus on the MD&A, the risk factors, the business, the legal proceedings, and many of them cross-reference the ESG report or the sustainability report. So it's a key point that I want to mention here, because a lot of the questions you will see is about consistency between those other reports or information on the website or the sustainability report and what is in the 10K. So as an example, it would be, why do you capture and indicate in your sustainability report that this and this are material, events or material impact, but you don't talk about it in your 10K? So how do you apply different materiality between the two documents, right? Or how is that consistent, and why in one versus the other? So there's no comments that we have seen so far related to the financial statements themselves. As I said as well, in addition of the consistency, the other comments are about the quantification. So now that, passing the consistency is about, hey, you have, identify some risk or opportunities, but what about quantifying, including the cost of the various impact, if material? For example, physical impacts of the climate change, insurance impact, weather-related damages. As you may know, if anyone is in the US, and I sit here I should have said in New Jersey, not far from our Front Park office at home, but in New Jersey, we have had a lot of very significant storm. So you may have, a comment on, you didn't go and impact really what those related damage have been, impacting on your business. The other comments we've seen is the indirect consequences of climate regulations or business trends. So, for example, are you expecting increased cost? There's trends and uncertainties to disclose in MD&A. The change in demand, the reputation's risk, transition risk, and finally, as well, when there is a lot of capital expenditures and, company have disclosed sometimes in one or the other, some capital expenditures they're making, but how is that related to the climate project, if any, and is there consistency on the information? Compliant costs, are you in a business that is going to or has incurred a lot of compliant costs related to that? And then the net zero commitment. So as we mentioned, we expect further proposed release. It was initially expected to be more like, this month or next month. Now we think it will be likely more like in January, February timeframe that the proposed release will come as it relates to climate change, which may push back a little bit, the mandatory compliance more towards end of 2022, beginning of 2023, really, if that's the timing. So we expect, though, that the release for the human capital and for the corporate governance and cybersecurity to still come by the end of this year, and climate change, as I said, just beginning of next year. So with that, go ahead.
Can I ask a couple of questions? First, I guess on the last slide, it looked like there was started to be a reduction in the number of SPACs registering in the last quarter. I don't know if that's a trend that you think that's going to continue in terms of the third quarter of 2021. And I guess the second thing is, from what you're saying about the letters from the SEC, what the companies need to be careful about, the FPIs need to be careful about for this year end is I guess reconciliation of the information in their sustainability reports with their registration statement. Although the SEC is going out there looking at other information that the company's published outside its registration statement and comparing that to what's in the registration statement. So I guess there's, work to be done here, because I guess that's not something that we've seen the SEC look at in the past. I guess because of that focus, that it's something that the companies need to be careful about for this year end.
That's correct, Kieran. That's a great question, great point. Exactly. So especially as it relates to, so on the second point, and I will cover the first one, the consistency between any other information, the sustainability report and the annual report, 20F or 10K. Definitely there's a lot of thinking, and especially around, I was surprised around how some will then say something is material in one document, but not talk about in the other document, or not talk in the same way at all, right? So it triggers a lot of question about materiality in my mind, but as well just, the risk and identified. So definitely the sustainability report, the investor presentations, right? Any other information on the website is important to be reconciled on that topic with the 20F. On your first point about the SPAC activity, and please, Jonathan, chime in there as well, and on the IPO, there's been a slight slowdown, but part of it, there was some accounting issues and some other issues in the market, but it's as well the time of the year where you have to update certain financial statements. So there's a couple of considerations, but it's still there and still very active. So I expect that it's slightly slowing down a little bit, but it will be, based on, as I mentioned, we have a big backlog, and we have a big, a lot of companies we're working with right now in the backlog there in the pipeline. So I expect that it's still going strong for another, for another period.
Yeah, and I would say on the SPAC side, the SEC has been hyper vigilant on SPACs because they are worried about people cutting corners potentially, or people not being ready to be public, et cetera. So I work on a few SPACs and de-SPAC situations, and they get very extensive, very detailed review and comment letters and multiple rounds of comment letters. We've also seen situations where people voted. So when you're the SPAC shareholders, you basically get two choices. One, to vote for accepting the merger, right, assuming they found a target. And then two, after you accept the merger or not, whether you want to take your money back out. So we've seen some cases where a large majority voted in favor of the merger, and then a large majority immediately said, I want my money back, because that's part of how SPACs work. You can always get your money back if you don't like if you don't want to leave it in the company. So, and the reason that can happen is you can get your money back faster if you approve the transaction and then get your money back, versus if you deny the transaction, then you have to wait till the SPAC unwinds down the road. So, and you also get to keep the warrants in most SPAC situations, even if you take your money back. So there's a lot of concerns just around the dynamics, the incentives, et cetera, and the SEC, like I pointed out, if it's, SPACs in China are two of the things that get a lot of attention. And so that's raising the risk profile. We also had a period where, there were so many SPACs chasing, companies realistically, there aren't that many companies that are probably ready and able and should be public, but you've got a lot of money running around with a set time frame, say, 18 months to 24 months to do a transaction. So, that's some of the dynamics there.
Yeah. Just, I guess we have a question here from Marcel Lopez-Fila. He's asking about if the amount of these of the rules in the U.S. market are not excessive. And I guess I remember years ago thinking about, like, in Brazil, we had IFRS was brought into play, and everyone thought IFRS was a huge, was very detailed, because it was like 2,500 pages of accounting rules. And then I remember at the time thinking, well, if people are thinking that these IFRS rules are a lot of information. I think in the US market, the US GAAP is like 10 times that. And I think the US market is tradition. I think there's a lot of rules in the US market, I guess, for foreign companies. I don't know if that's part of a cultural adaptation for foreign companies, and if they have difficulties adapting to the volume and detail of the rules in the US market.
Yeah, maybe on that side. And I think it's fair to say it's more regulation coming, but I think, like Jonathan said, right, this administration is going to be more focused on more regulation. So it's kind of a shift in mindset there. So this is part of what is expected for this administration, to be more precise and detailed. So I think, is it too much? I think we're still far from, maybe all of them being out there and implemented. So I think it remains as well to be seen how it impacts. And, usually there's a pattern, right? It's a wave. It goes more and then less and more and less. So we'll have to see how it goes.
Yeah, and I would say a number of the topics we're talking about today that are like new are really the refinements or changes to rules that already existed. And so that was part of Clayton's mission, or what he viewed as mission, is to streamline and modernize some of the old disclosures. So I think, some of the new things we'll talk about around pro formas and 305s and things like that, they have simplified some of the rules, but change is still hard, right? Even if you were starting with some of the old rules or starting with the new rules, like I think in most cases you would start with the new rules and say that's better, but you're still transitioning from old rules to replacement rules. So, that's still effort and work, and sometimes, challenging for people. The new regulations around ESG and things like that, I think part of that is a sign of the times, which is a good segue to like what's challenging around these ESG, and I'll just use climate as kind of the primary example here, is this concept of what's material, right? So you heard Guilaine talk about it when Gensler was going through his testimony to be confirmed in his role. He got peppered by congressmen, senators and representatives about, would you make people disclose this? Would you make people disclose that? And he always went back to the well, there's an established framework that requires judgment, but what's material for investors is in the context of all the overall information. I'm paraphrasing, you can look up the exact legal definition, but I'm paraphrasing a bit. In the context of all the information, is it important for a reasonable investor to find that important for making a buy decision, making a sell decision, or making a voting decision, right? And so when you think about the shift in the last few years around investors' attention to ESG and climate, when you think about the acceleration of climate events, certainly that's why there's more focus on, climate, for example. When you think about human capital, right, when you think about when a lot of these rules were set, this was like closer to the Industrial Revolution than now, right? It was all about machinery and equipment and, all those types of things. And as we've, the economies have shifted, a lot of the most valuable resources of many companies are, actually the human capital of the company, right? And other intangibles. So, for investors, that's a much more meaningful understanding, like, hey, how do you maintain, develop, et cetera, that human capital? And then when we switch to climate, what's the impact of climate to you? And what's the impact of you to climate, right? And I think when you look at the 2010 rules that Guilaine just went through, a lot of that is focused on what's the impact of climate to you, the company, right? That's kind of the starting point. And then, when you look forward to, what are people trying to figure out the right disclosures around, there's more of that, but there's also more of what's your impact to, the world around you. And, why does that matter? Because, some investors, they're going to make investment decisions on, are you destroying the environment? Like we already see people that say, oh, we're going to invest in carbon fuel type companies, right? Like, okay, that's kind of relevant for the impact, maybe the viability of your company, maybe the viability of your products that you offer, et cetera. So you can see how it comes in, but you can also see that it's much more complex than, at least as accountants, we like to focus on, like, what's my materiality number, right? What's that number? If it's below that, I don't care. If it's above that, et cetera, right? It's a much more, holistic kind of view of materiality than just a number. So I think that's an important framework. But, this whole climate change topic is very complicated, right? It's politically charged, it's emotional, and then even without those two things, it's super complicated with regards to what are the right metrics, who determines what the right metrics are, like who's in charge of those metrics, do they need to be consistent across companies? All of those types of things are super complicated, right? And there's a lot of groups around the world who are trying to develop metrics, trying to figure out the right way forward. And I think, the SEC put out there sort of a request for input, right? I think it had like maybe 15 questions on it but each one of them had like multiple questions underneath it. But those questions really focus on, some of the topics I talk about, like, what are the right metrics? Do they need to be consistent? Should they be industry specific? Should they have third-party assurance? Do they go in the 10K or the 20F? Do they go in the 4-part? Do they go somewhere else? How does it relate to ICFR or, DCMP? Are there management attestations? What are the controls around that? Do big issuers go first and then, smaller issues and then, et cetera? So, if you Google SEC climate, it'll take you right to the requests. There's also a landing page that the SEC put together on climate, which kind of shows a bunch of things, their enforcement activity, the 2010 guidance, this request for information. So there's a lot there, but it is complicated, but it all hinges on this notion of what's material for, deciding to buy, sell, or vote. And you can see how that's a much more complex calculus today than it was maybe even 5 years ago, but definitely 10 years ago when, or 20 or 30 when some of the existing rules were put into place.
Yeah, we got a question here from Valderio Matias asking about what the climate change disclosures would follow, and is asking here about the SASB rules, the TCDF rules, or IR rules. I guess the point is currently outside the registration statement, there's no required climate report that has to be done. I guess we've seen these questions coming in now in terms of questioning the disclosure in the registration statement, but I guess no separate report is currently required. I guess that's a separate discussion, and other things are going on in that. And I guess we'll see as well what the SEC is going to come up with in terms of their task force and what questions they're going to have, I guess, at the start of next year.
Yeah, and that was one of the questions they wanted input on, right? Around which rule setters, should they be consistent, et cetera. I know Gensler has testified around his views on climate disclosure. I know he has a bias towards consistency. Doesn't mean every metric is relevant for every party or equally relevant. But I do think that they probably will tilt against, a note, kind of like a non-GAAP notion, like make it up as you go. You tell people what it is, right? Because there's probably easier to compare companies when you have kind of a defined metrics, but that also creates its own complexity. So that's what part of what makes this hard.
Yeah, and I was going to say, and add there was a lot of discussion with that concept release we just covered, which was, does that information need to be filed or furnished, right? Which is very important for foreign private issuers that already do a lot of those reports. And really the difference, as you may know, between furnishing and filing is the liability you attach to it. So being in a US environment and all of these political aspects and the enforcement that we're going to cover, of course, people are very sensitive on what, do we have additional reporting to do or not, and then what liability we attach to that information, right? So this is still key to be looking at and discuss. At this point in time, it's still a debate. And as you said, Kieran, there is no separate reporting required. All what we have asked and talked about is already in those 20F or F1, F4 that you are doing with the SEC. And, how the climate change impacts the current disclosure that you have, your risk, your MD&A, everything else. The sustainability report, and to your point on, is there a framework to the question that got asked there? There's a lot of discussion around which one. The TCFD seems to be the one that is getting more attraction around the world. So the SEC is looking at that as well, right, as part of the input and the thinking. So there's not one right now, but there's definitely a lot of discussion around it, and they are looking at, and that was the PwC view. It would be good to have some consistency and the SEC looking at what's happening globally. But of course, there's some specificity about the US. So more to be seen, and we'll be happy to report when we have a little bit more in the future webcast here.
Yeah, and I would say, there's a good chance this is going to go to the courts, right? We've seen that on controversial issues in the past, like the resource extraction disclosures. That took, something like a decade to get to a final answer, but the original rules were vacated by the courts here in the U.S. So, this could drag out, but I think it's my personal view is it's inevitable that there will be more climate disclosures. I think the debate is really what are those? And I think that's not because of political agendas, but because investors really do want more information. So I think given that it's a lot of it driven by investors, we will see something. It's just a matter of what and when. But to circle back to the points that Guilaine went over, like, I would definitely look at that 2010 guidance. I would definitely look at that sample letter that went out. They send those sample letters out when they want the market to know about it quickly and broadly. And I know Guilaine's going to talk about enforcement on the next slide, but, as part of their climate initiatives, one of the first things they did was set up a group in enforcement for climate disclosures with 20 plus enforcement individuals. And, the starting point is going to be that 2010 guidance. So Guilaine will probably touch on that a little bit, but, I would definitely distinguish the forward-looking versus the what's here today, and not lose focus of that's a big emphasis of the SEC.
No, thanks, Jonathan. It's a great transition here to the enforcement in our next slide here. And we'll just move in on that, and then the SEC comment later trends. But first of all, on enforcement, I want to mention that during the summer, you may have noticed, or maybe not yet, is that the SEC announced actually announced that the current New Jersey Attorney General was becoming the next director of enforcement. So as I said, I sit in New Jersey, and so the current Attorney General is going to become the next director of enforcement. So we expect quite of an impact from that. We've noted that the recent cases are mostly action that started under previous administrations. So just always think that, from an enforcement decision, it always takes a little while before you really see the direction of an administration, because it takes a little long to get some of the cases finalized. So right now we see most of the cases we see and decision made are related to the previous administration. So we'll have to stay tuned on some of the new cases to see how they evolve as well. What do we expect under this administration? We expect a significant cultural change. We said it before, on a couple of the focus, but we definitely expect that in enforcement. And you can see already new position. That's why I think, the background of who is doing what is kind of important. We expect a very active enforcement and penalties to be actually more severe and a little larger. ESG is as well, like Jonathan just mentioned, right? So in March, the SEC has announced the creation of a climate and ESG task force in the Division of Enforcement. And the initial focus will be to identify any material gaps or misstatements in issuer disclosure of climate risk under the existing rules. So a little bit more to look at as well. So they have comment letters, but there's be as well enforcement looking at that climate change disclosures. We saw more FCPA cases recently. So you may have actually noted some recent significant cases, including some last week. And the charges, for example, in the one last week was around violation of anti-bribery, books and records, and internal control provision of the FCPA. And I think I thought it was very interesting reading it, how much of a focus there was around the internal control. And this has been the case in many of the enforcement decisions. So I think controls and the control environment is very important for companies to always think about. This is the case as well on some recent cases on cybersecurity. So we said one of the other key focus is cybersecurity. And I want to mention that one of the enforcement decisions, which was made in June, where the SEC charged an issuer with cybersecurity disclosure control failures. And so in this case, the order found that the company failed to maintain good disclosure controls and procedures that would have actually, prevent that the appropriate disclosure around the vulnerability of the systems, look at the disclosure reporting timely. So this is a key here that if there is a cybersecurity incident, it is expected that it is going to be reported timely to the market, and that the company has the control to assess the impact and the material impact of that cybersecurity incident in the company. So again, back to the controls and understanding here. And as it relates to the cyber attack, the second point I want to mention here is the SEC Division of Enforcement had released a lot of requests for information on cyber attacks. So some registrants have received requests for information related to widely publicized attacks in December, which was the SolarWinds one. And now there's some follow-ups and further discussion there and other cyber attacks. So this is the other big trends that I want to mention here, is definitely the SEC has been looking at the cyber attack and the way it is handled from a disclosure and from a control perspective. So two key points for company to think about that, is the information going up through the chains to the appropriate people and not segregated between the IT trying to do something and not reporting it to people in charge of, reporting externally, like in a 20F or things like that. So a few things here to think about from an enforcement point.
Just on that, Guilaine, I mean, one thing that really catches my attention is this whistleblower awards, because you talk about like $175 million for 39 individuals, like for like several million dollars per person. So that's a huge incentive for whistleblowers to go straight to the SEC and not to the company's internal processes. And because I guess it's very difficult for any company to offer something as interesting for whistleblowers internally, and I guess than what the SEC is offering, and under their current process, and the SEC publishing these numbers, and they're being very large. Is that something that we're likely to see more of, like more whistleblowers going directly to the SEC, even though the companies are based overseas?
So let me say two things there. I think, Kieran, it's a good point there. So first of all, the whistleblower program, they always refer to the SEC as like transforming, right? Because they get like so many tips, and usually, that's if those tips really transform and gets them to an enforcement decision, it's good information coming from inside usually, right? Or from like people that have knowledge or something. So it's a very good way for them to identify issues. So definitely they really like the whistleblower program. However, one thing I will mention here is that they publicize that as well because it's like showing that they're making progress and who gets what. But the penalties are as well in relation to the way the company has been handled and the enforcement, right? And the way how much the enforcement has been able to collect. So every company that has a good process to address, like issues going on and controls issues and, anything that is going on in the company, it's always best because, first of all, there will be less issues of fraud or anything else to report. But two, it's actually, very important from the way the SEC will look at how the company did look and react to an issue. It's as well very important around that.
Yeah, I would also add, just the topics that we're talking about, climate, cyber, those types of things, like knowing that those are the focus of the SEC, like they're going to be digging in on these topics, right? So on some of these things like cyber, that particular enforcement action that Guilaine was talking about, that company timely disclosed that there was a cyber incident, but they didn't disclose everything they knew. And so the only way the SEC knows that is they send a, request for information, they get more information, and it goes on, and all of a sudden, there's a bigger problem. And so, even some of these requests for information around some of the other cyber incidents, like the SolarWinds, like the second round of comments can be super detailed, like computer logs, right? I mean, like very detailed stuff. So enforcement has a lot of discretion, I would say, and they can get very deep very quick. So I think, just being aware of which topics they're focused on, and they can be focused on anything, right? You could see a very broad list of things here, but we know they want to set the tone with climate. We know they want to set the tone with cyber, two examples. So those are two areas I would be hyper vigilant on.
Right. We had a couple more questions here. Paulo Arakaki asking if there's an expectation in the future to simplify regulation. I'm not sure we're seeing much of that. We have Marcella asking about the use of digital currency in different countries and then the difficulties in adapting the rules after IPO. We've seen a number of issues in obviously in Brazilian companies. I mean, obviously we've seen a number of. I think even like the majority of Brazilian companies have had material weaknesses at one stage or another in terms of their internal controls, and in relation to internal controls over financial reporting. And we got another question here from Andrea De Lungo asking about what's the local reporting requirements. At least here in Brazil, like if the company's listed locally, they have to make the same disclosure available to their local investors as to the foreign investors. So everything made available to via the SEC in the US. If the company's listed in Brazil, they would be required to make all of the material information available here locally. So what we normally see is, translations of documents made available in the US made available in Brazil.
Yeah, I think on that point, Kieran, right, I think the key is most of the time, if you are a foreign private issuer and you are listed in countries and you have a local reporting requirement, let's say on cyber ESG or whatever the topic we have talked about, right, there's an SEC requirement to disclose or furnish that same information that a local investor will get in a 6K. So again, the point about disclosing or like reconciliation or consistency of information between those documents is applicable, whether you put it on a 6K, whether it's on your website. As I said, most of it right now is just information that is not subject to the same liability that they compare with, right? And they will ask question about how it impacted or how it was addressed in the document that is actually filed, i.e. the 10K or the 20F. So the focus, to clarify everything we just said, whether it's cybersecurity, whether it is ESG or some of the other matters we talked about, it's really about, I advise companies and teams to focus on the 20F and the 10Ks and how this other information that exists has been, thought through as you report in your 20F and your 10K and how consistent it is in that document.
Okay.
Yeah, and on crypto, that's a complicated topic. I don't think we were planning on necessarily delving too deep into that or really too much at all. But I think the SEC, Gensler has testified in front of our Congress, saying that they need more powers to regulate the crypto market, and crypto is a broad term too. So it depends on whether you're talking about initial coin offerings or stable coins or kind of your Bitcoin type coins or central bank digital currency. So all of them have different potential regulatory and accounting consequences. So probably would need another 2 hours to kind of hit on that topic. And the punchline would be, they're still figuring that out for the most part.
Or just call Jonathan separately and he will be more than happy to tell you everything about it.
Provided you have the time.
Yeah. All right. Should we turn to the next one? And by the way, keep sending in the questions. Makes it more interesting for us for sure. And the other thing I would say is that, on the question of complexity, I talked about this before, but the last administration did a lot to streamline and modernize. The problem is all those rules are now becoming effective now. And so even though I would argue that many of the new rules are easier, make more common sense, more aligned with the time periods presented in the K or the 20F, it's still a lot of work to change, right? So, it's kind of adding work, but I think once that work gets done, some of these rules make more sense and are simpler than before, but simpler is relative. So it's still, maybe a better word would be it's still complex, but maybe less complex in some regards. But I don't see less rules really anytime soon. So the next slide is really like, what are some of the key things impacting the 20F for this year? And, I guess maybe if I take a step back, like on all these topics we're covering, we're hitting some highlights. Nothing replaces going in and reading the actual rules themselves. And, there's also, when I start with these rules, I usually, well, if I didn't write it, or participate in it, I'll read what PwC put out. I'll look at what some of the law firms put out. I'll read the rule, which is always in the back of whatever they put out. So when these rules come out, it'll be, 290 pages. The last 10 pages is the actual rule, and the first 100 pages is about how they got there. And then there's like 100 pages in the middle about the Paperwork Reduction Act, which I always find ironic if people are putting this out. And then you get to the actual rules at the end. Like I always start with the actual rules and then kind of work my way back to the history. Otherwise, I'm just asleep by the time I get to the end, to be honest. But it takes more than once to read these, and there's complexities. But, if you're responsible for one of these areas, like just really digging in is really important. But to hit some of the highlights, the MD&A rules have been updated. And I think this is one where when you go into the rules, like earlier on in the actual release, there's a nice table that kind of outlines all the individual changes and what they are, which is fairly easy to read. But what they've tried to do is really reshuffle and streamline and codify to some degree guidance that had been out there into the actual SK rules. And I'll focus on like a couple of topics that are really of interest that require a little bit of effort to, kind of rework your MD&A, but critical accounting estimates is, continues to be a big focus. I know it says on here, not applicable if covered under IAS 1, but broadly speaking, I would say companies have largely replicated what was in the footnotes into the four-part. And what the SEC is really trying to ground people back on the guidance is really focusing on the uncertainties, the key judgments, sensitivities, more helping people understand the nature and the uncertainty of those, critical estimates. Really another topic is really refocusing on material forward-looking trends. So you see a lot of comments about, forward-looking comment letters, but really regrounding on that. There are some things that are eliminated, like the 5-year selected financial data table. Great, that's easy, delete. And I would say overall, it is billed as largely a simplification and a codification. But I think now is a good time to really go back to the guidance in its new form and spend the time to say, okay, how does my MD&A really stack up against this? Am I really focusing on the right things? Because a lot of the stuff for some of our clients and some of our people, it's just always been this way, right? So they haven't, like a lot of people haven't even gone back to the original guidance. It's just, okay, I do another 20F or another 10K and I just update it and I move forward because that's what the person before me did. So I think the SEC is, trying to reemphasize certain points, maybe reshuffle and simplify to a degree, but it's also putting people on notice of like, okay, not everyone has been totally spot on with the existing guidance. So now's the time to kind of refocus and spend some intellectual capital, coming up with your new MD&A. There were also some other updates. Kieran spoke about it, but the mining disclosures, which I'm the last person to talk about that. So maybe Guilaine can talk about it if we need to. Also, the banking disclosures, colloquially called Guide 3, because it was Guide 3, and now it's codified into the actual guidance. That was largely again, a reshuffling, a simplification to some degree, but still another block and tackle exercise. But there are a few points within Guide 3 that I would say people have spent more time on, and I think we'll talk about that a little bit later, touch. And then another reminder is under the key performance indicators. This is actually guidance that was codified for last year, so not necessarily new, but worth focusing on. The new guidance that came out last year around the disclosures and the expectations around the use of KPIs. So these would be, key performance indicators, but, metrics that aren't like non-GAAP metrics. They're not GAAP, but they're also not non-GAAP, if that makes sense, right? So other things that management focuses on. And I would also point out that we've also seen enforcement actions on KPIs themselves. There was one last year where the KPIs were actually calculated correctly, but the MD&A and the context around that was incomplete. So it was essentially, I would say, like a supply chain situation where money or inventory was being moved, but they were, I think, stacking up on inventory would be, I guess, the nice way of saying it. Nothing wrong with what they did, but that wasn't described in the context of the KPIs, and so there was an enforcement action around that. So again, how you explain the KPIs, the context, whether it's omission or commission, either one of those could lead to an enforcement action. So I think that's all I was going to cover here on this slide. Guilaine, unless there's anything else you wanted to chime in there.
No, that's great. So I think you covered the main items. I just want to remind again, like you said, on the credit estimates, if you follow IS1 and IFRS, it doesn't apply, but that means you should still look that you're really compliant with IS1 around that area, because there will be a little bit more focus. So we have seen people looking back at this section here to see how it compares to the to domestic and what they're going to do. So.
Yeah, we had a question here from Thais Hamas asking if the climate changes expected that clients are going to have to implement internal controls over financial reporting in terms of the risks and control matrices. I guess climate change is just one additional risk. I guess there's not a specific item on this in terms of the financial statements. I guess what we've been seeing in terms of the questions have been outside the financial statements, but obviously it's a risk for many companies, and as was said, like in terms of their future plans and what they expect to do, it's probably going to be relevant in terms of their future strategic plans. But I'm not aware of someone having a specific risk and control matrix related to climate change.
Well, I would say at this point, it's probably not ICFR, but it would definitely be DCMP, right? Because it's part of your broader disclosures. So I think, kind of cyber risk, climate, those types of things that we've seen a focus on, and enforcement actions and comment letters, like it would definitely fall into that piece at least. Yeah, and maybe just to be clear here, that ICFR relates to the controls over the financial reporting, whereas whereas you also have the controls over the rest of the 20F. So I think what you're referring to is the disclosure controls and procedures over the rest of the 20F. Obviously, there's a lot of information that should be in there about climate change, and I guess those should be picked up in your disclosure controls and procedures, presumably. I see other questions here. We've a question from Marcel on cyber in terms of issues, I guess cyber issues and the impact on financial statements. Certainly, companies who have cyber attacks need to evaluate the impact on their financial information. We have a question here from Arthur asking about the disclosure MD&A disclosures, eliminating disclosures on contractual obligations. I'm not sure if there's something specific on elimination of contractual obligations, because normally you have disclosures in the financial statements on contractual obligations in any case. Well, that was on the slide, I think. Yeah. So that table itself was eliminated, but when you read the guidance, it gets picked up kind of in the principles-based concepts of the other sections of the MD&A. So to the extent that it's material, you should be thinking about that in the broader MD&A. So that's an example of moving from a prescriptive guidance to principles-based concepts.
Yeah, and maybe to that point as well, Kieran, because I think that's where a lot of people get confused. The SEC was as well trying to eliminate some duplication. And for example, for an IFRS filer, to your point, it's already there in the financial statement, the IFRS 7 table, right? The maturity table is a lot of the information that should be consistent with what is in the contractual obligation table. So part of that was, do you have to repeat everywhere, or is that, as well, the exact same requirement or not? So it doesn't change anything as it relates to the IFRS 7 table in the financial statement. I want to be clear. It's still expected to be in the financial statement. And then in the 4 part, you may think about whether there's any changes to that contractual table. But I have had already conversation with many where it's a key information that the investors want, depending on the industry. Like if I say, for example, the pharma industry. So I heard so many investors that really are like, I still want that table in contractual obligation table. So, something every registrants need to assess how it really changed or anything on that specific point to that question.
Okay. Okay, so I guess we have reminders and SEC filings now.
Sure. So maybe on that point, a few things that we just want to mention very briefly here, and happy to go in further details. But as you know, the filing status for the company really drives the reporting requirement for both the going public process and throughout the life of the public company. So filer status should be assessed continuously during the going public process and each fiscal year after for public companies. So now is really a good time, if you have not done it yet, as you prepare for year end, please make sure to check your filing status. Why does that matter, right? Because if you're an FPI, and we have seen a couple of FPI, for example, losing status at June 30 if you're a calendar year end. And that has a lot of consequences, right? Starting January 1st, you cannot report on the 20F any longer. You have to report on the 10K, and you will have to do US GAAP versus IFRS, for example. So we don't have that many that are losing status, but when they do, then it has a lot of consequences. And when it's like someone is not checking on it, it's a pretty rough surprise. Same thing, check about your EGC status, so emerging growth company status. And as you may know, there's a lot of accommodation that you can get as an emerging growth company. And if you lose your status, and with the markets, we have said the markets have been really, going up in every side of the way. Companies have had very different results that made their filing status potentially different, from large accelerated filers to non-accelerated filers, losing EGC status. And therefore, if they, for example, lose that, they might not be entitled to some exemptions at your end. So please check your filing status, EGC, FPI. Most of the tests happen at June 30th. But for EGC status, it might be a different point in time, depending on when you went IPO and so on. There's other things in there to look at. But as you get to year end, again, good time now. Okay, and then happy to take questions on that one. But that was more like a reminder. Please, like the cover sheet. It's how many times do I get a 20F, and like the boxes on the cover sheet are like no one really filled that up, or the lawyers have been filling that up, and there's a change and no one really understood why, or there's no change and there should be a change. So just look at that cover sheet of the Form 20F of the F1 now versus like later. Maybe we move to the SEC comment letter, except there's questions there, Kieran.
Yeah, I think we could go to the SEC comment letters. I guess maybe, and I don't know if we're expecting because a lot of the SECs, I guess, a lot of companies, at least here in Brazil, haven't received SEC comment letters in a long time. I guess can we expect that it will continue like that?
I don't think so. I mean, as we said, I think we expect and we have seen, and to be honest, I have seen a lot of more comments, including some of the Brazilian companies here that are in process. The SEC will always look at all the in-process filings, so IPOs, SPAC transaction, that you will have, definitely a review process. But I've seen a lot of comments recently as well under the Form 20F, and they were doing them. And you may know actually that the SEC has a fiscal year end this September 30th. And so they are this week and last week I've started to see a lot of SEC comment letter coming because they have a requirement to do a review at least of every public company once every 3 years, and to be able to count for that cycle, right, and their fiscal year end, it has to be by September 30th. So they're catching up on a couple of the companies as well for information, and including foreign private issuers. So I've seen definitely a lot of, and they have been busy as well, very much so by the volume of transactions. So there's been first a focus on transaction and then on the regular filing. So here you can see on the slide here, I focus on IFRS filers because this is really what we have here a lot in the audience, but we have as well a lot of details from a US GAAP perspective. And on this slide, what we did is the trailing comments for the last 12 months ending June 30th. We'll update that data when we pass September 30th. This is we do that for US GAAP and IFRS in even more regular basis under US GAAP. This, as you can see, doesn't have on top the trends we just talked about on climate change because those comments just came out last week and the week before. The SEC comments so far have been pretty consistent from one period to the other. And you can see we have revenue recognition, non-GAAP, business combination, segment reporting, financial instrument from an IFRS standpoint. What is interesting is from both IFRS and US GAAP, the top of the top has been around non-GAAP measure. So I'm going to just remind a few points for FPI especially. Revenue recognition, we have seen I want to mention here revenue recognition because we have seen a trend and then going up on revenue recognition in the recent month. And this is interesting because US GAAP was a little earlier, slightly decreased this quarter, but it was increased before. So I think it's just a matter of timing. So sometimes seeing what the domestic and US GAAP filers got is giving us a sense for what's coming up as well for IFRS filers. The other one here that is coming, and it's kind of captured under the non-GAAP, but it's as well just presentation for IFRS filers that we see a trend that is not completely captured here, is on presentation of the income statement. There's been more question about the allocation of certain costs, and for example, whether some costs should be allocated to cost of goods sold versus other line item. So I remind people here, just not forget that if you do a P&L by function, so including cost of goods sold, that really the cost of goods sold should include all the costs that support the revenue. And so we have a lot of debate around that these days, and there's a lot of questions around it. So just a quick reminder here. Finally, on non-GAAP, as I said, the top of the trend here on SEC comment, based on the volume, a few things. So remember that whenever you have a non-GAAP measure, that you should present the GAAP measure with equal or greater prominence with the non-GAAP measure. Make sure to present the most directly comparable GAAP measure. A full non-GAAP P&L is not a good idea. This is not permitted under SEC rules. And if you make an adjustment, make sure that the description of that adjustment is very clear. We have had a lot of discussion about those line of adjustments and what they are. And finally, one thing that I've seen that is specifically more impacting IFRS FPI has been around the labeling of those non-GAAP. And part of them are sometimes in the financial statement for many reasons under IFRS. But so two examples I will give here, EBITDA and free cash flow. That are the common one I see with IFRS filers and there are FPI. And the SEC has a specific definition of EBITDA and has a specific definition of free cash flow. So it is expected if that the measure the company is using is not the same as that definition, then it will be called something else. It will be adjusted EBITDA. It will be adjusted free cash flow, but it will not be EBITDA or free cash flow because there is a common definition and understanding about that. And I have seen quite a few comments on that topic recently. So that's pretty quickly some of the key topics. I'm more than happy to take any of the questions there. Yeah. But one thing I want to mention as well, and I'm sure you may have a question already there, but one of the things I was going to mention here is, and the next slide is, we have a lot of, like you mentioned, a lot of discussion of an example from SEC Comment Letter Trends publication. It focused on US GAAP in here, but it's a good indication. And from an IFRS filers, always happy to discuss and take questions.
Hey, yeah. Guilaine, I'd also add in, and we talked about this the other day, with the presentation on the income statement, we're also seeing a focus on if things are kind of put down outside of like operating, right, or kind of below the line, if you will, right? So, and just to link that to the non-GAAP or non-IFRS measures, sometimes we see questions on the financial statements themselves based upon the non-GAAP measures. So when people start backing things out, the first question, if it's not clear from the SEC, will be, which line item is that in? What is that? Please tell me more. And then sometimes that results in questions like, well, why isn't that up here or in that line item? Why do you have it in that line item? And we've actually seen that non-GAAP string result in restatements of income statement line items as well.
No, it's a very good point, Jonathan, because I think it's back to being clear what those line items are, right, in the non-GAAP, and from there, sometimes because it's not clear, they ask a question of what do you mean in that line item, and then where is it, to your point, right, and then we don't understand your P&L and your metrics you're reporting there are then definitely like, what we would expect. So you kind of see the chain, right, and the discussion going on there. So I think it's very key here to think about that as we get through year end.
Yeah, we have a question here about, I guess, Marcel, maybe expecting to see more questions around like COVID. We have an energy crisis, like climate change, impairment. I guess what should we expect for the future or potentially for this year end that where the SEC could be looking at?
Yeah, so maybe a few things we took cover already, right? We are seeing already definitely a lot of comments as it relates to climate change. So we expect that. I expect that the presentation and the non-GAAP, two topics we just talked about, it will still be on top of the list. And I expect that to continue. Segments is always very key, and I have seen and I still see a lot of comments on segments. So that will be, I would say, especially with COVID, one of the impact has been that companies have been reorganizing themselves. They've changed their way they report information. They have been changing the way they're structured. And so have they adopted or have they changed the way the segments disclosure are, and is that aligned with the way the information is now reported? So that's what I expect, especially in the IFRS FPI world at this point. From a COVID perspective, impairments and revenue recognition and all those topics, they were already out there and they still continue to be, looked at. So I have discussion these days on impairment and how it is, because some businesses are like having a harder time to get back. So it is through more the impairment discussion, right? How it impacted and what the cash flow and the disclosure around it. So that would be the 4 or 5 key topics that I still expect for year end here.
Yeah, and COVID non-GAAP is getting a lot of focus, continues to get a lot of focus. I actually have in my inbox one of our clients follow-up comment letter on their non-GAAP adjustments for COVID. So we have a good podcast on the US podcast stuff around COVID adjustments and non-GAAP if you want to listen to that. But, that's one where, things like, hey, we had to hire additional people to clean, things like that, or, we had to rent more space to spread out our people, whatever, like those things. I think they're pretty open to non-GAAP measures, but when you start saying like, well, we we had these losses, or, you know, we would have had this revenue, or, you know, we had mark-to-market losses or credit losses. Like, that's where they push back a lot on, you know, how you really distinguish. I mean, we all know that COVID impacted the environment, you know, the economies, and that changed interest rates and credit. Like, it's a, you know, it's obviously everything, or many things are tangentially related to COVID, but without being able to very explicitly be able to bifurcate that, the SEC has been questioning that quite a bit.
Yeah. We have a question here from Arthur Leche asking about the asset management and specific concerns of the SEC in terms of asset management, in terms of forms like presentation format, disclosures, concentration of assets, and I guess the related disclosures in that area. And I'm guessing this is going to be, like, if it's asset management, it could well, you know, be picked up. May have Guide 3. I guess there are those SEC comment letters specifically for financial institutions.
Yeah, so
that would be good.
Guide 3 only relates, it was clarified, the new Guide 3, that it only relates to banks, bank holding companies. So if you're not a bank, that wouldn't apply to you. I mean, the asset managers are one of the spaces where you see a lot of non-GAAP and a lot of intricates and rows in that non-GAAP measure. So it's not that uncommon. In fact, like a year ago or so, there were a lot of comments, at least the US asset managers, around their non-GAAP metrics. But other than that, I can't think of anything explicit to this beyond, like, the, you know, the general topics we've been talking about.
Okay, thanks. And then I guess we have another question here from Leonardo Mariano asking about, is there anything that SEC expects FPIs to include in their control risk matrix related to ESG or climate changes? For example, controls to guarantee ESG commitments are being fulfilled. I mean, I guess, you know, if a company's made commitments in the ESG space, I mean, if it's, I'm just thinking here, like, from practical terms, if a company made a public commitment to net zero, or it made like a commitment to reduce, like for example, like the Paris Agreement, because like let's say a company decides to copy gets the Brazilian Paris commitment and it makes a public commitment to that. I think that could be a significant impact on the company, because then it's if it publicly states it's going to make a 37% reduction by 2025 in terms of greenhouse gas emissions. Yeah, and under IFRS, I guess that you're going to get into the concept of assuming a public obligation to do that, and you know, I guess that this comes back to the issue about making about reconciliation of what you commit to in your sustainability report to what's reflected elsewhere in your registration document. I guess both in the financials and outside. But if you start making commitments in terms of, you know, and I guess this is one thing that we've seen a lot of companies don't really think about, is whenever they make these like commitments on a sustainability standpoint, I guess they don't really think through the implications, I guess, from disclosure and financial standpoint in the registration statements.
And I think, Kieran, sorry to interrupt on that one, but I think we have seen in the past in other areas like, I don't know, employee benefits, when companies make public commitment and create these constructive obligations that could create an impact directly in the financial statements under IFRS.
Yeah, and back to the, you know, the four part, if you will, the MD&A, you know, that's where, you know, really refocusing the MD&A about material trends, things like that. So if you know you're getting out of a business, or you're going to incur this, you know, significant cost to restructure something or transition what you're doing, or you're going to stop offering certain products, or you're dependent on, like, those are the kind of the material trends, like what's impacting your business. That's, you know, more important than, you know, kind of the generic, like, you know, our revenues went down 10% last quarter, you know, like, I mean, people can do the math, right? What they're really focused on is, like, what are the drivers of the results? And what's going to be impact, what does management focus on, and how does management view the company going forward, right? So that's where this also starts to connect with the four-part, even without whatever new rules are going to come out. The impact of the business going forward is still part of explaining your business from management's view, right? The other thing I would say is back to enforcement. So this focus on enforcement and climate, we talked about looking at the 2010 rules, but they're also very focused on people overcommitting, right? People going out there companies saying, we're going to do X, right? Or we've done Y, or, this is what we're doing, without actually doing anything, or over-promising, or not really having a plan, et cetera. So, if you're overstating without a real plan and real actions, you could quickly be in an SEC enforcement action for being misleading from that perspective.
And I guess with another last question here from Jessica Hitomi, asking about changes in insurance contracts to support, I guess, in relation to the pandemic and new products, and I guess to funds to support their employees and this presentation. I'm guessing, in Brazil, we had a number of discussions as to whether losses originating from the COVID crisis were covered by insurance contracts. And I think a number of insurance companies, instead of getting into the discussion about it, I think they made payouts in that respect. So I think COVID is likely to be, like COVID-related issues is likely to be significant in insurance companies and disclosures around that.
Well, Kieran, I learned the hard way that travel insurance does not cover pandemics. So that was a life lesson for me.
Yeah. I guess that's everything. I guess the insurance world is everyone learned more about insurance contracts and what's covered and what's not during the pandemic. Let me just go down to Manuel. Manuel, in terms of the issues on the PCOB side, maybe if you could tell us a little bit about some of the principles, because we've seen a lot of companies are in the pipeline, a lot of companies are new FPIs, and can you tell us some of the principal concerns in terms of the audits for these new FPIs?
Sure, Kieran. I think Jonathan mentioned something at the beginning, which I think is very important. Some of the key elements or the key aspects of the PCOB regulations, even if they are directed to the auditors, it will impact companies by default, right? Because it will impact the way the auditor conducts their audit. So in terms of the new FPIs or all those new public companies as a result of SPACs, I think I will probably group in four elements where I've seen areas that need to be carefully considered. One is, so when you change from being a private company to become a public company, there's multiple areas that will impact your auditor or the audit, and will require very detailed conversations. And also it's different when you decide to go public as a virtuous an IPO, or when you become public as a result of a SPAC, because the timeline you have is completely different to adapt to some of these changes. So companies need to think about new processes, new control that need to be in place when you become a public company. Not only because there will be a change in your financial reporting process or auditing standard, but also because you will probably need to consider how all these new changes will affect your structure. Things like, are you ready to prepare quarterly information, or you may need to create a new department to deal with regulatory communications and shareholders, or even if your team have the right skills to ensure complex accounting issues are properly addressed and incorporated in your financial statements, and more broader in all your disclosure. The other thing that also is linked to what Guilaine was saying about your qualification as a domestic or FPI register, and also change the accounting standard you are using in the preparation of financial statements. In some jurisdictions, you actually use different set of financial statements for private companies. So when moving to be an FPI, that means a significant change. But even if you are using IFRS, there are some IFRS that are only for public company, which you are not necessarily using at this point, which means that those areas are also, and have been an areas of focus in the past, like segment information. It's an area that the regulators tend to look at in a lot of detail. The other element is, the internal control over financial reporting. And we have seen a lot of new public company that started life as a public company with a significant, with a control deficiency or a material weakness in their control report, because their control structure was not ready for becoming a public company. So some of the key areas are, segregation of duties. You start with a structure that is less complex. Now you have more complexities because of virtue being public. So your segregation of duties is not enough to comply with the requirements of the standards, or your IT controls, because now you move from a less sophisticated IT structure to a more complex. And this is also linked to something that Jonathan and Guilaine mentioned about cybersecurity risks, which is now something I'm going to talk in a minute. And then there are other elements like your governance structure. So probably you didn't have an audit committee before. Now you need to have a governance structure where that changes the whole process of communicating with your in your structure, which means that you need to also factor that in your closing process, because now you're going to have more steps in that communication associated with the reporting process.
Okay, and maybe if you can tell us about some of the issues, I guess the recurring audit issues for FPIs, what you're seeing in that respect?
A lot of the topics where, in terms of from a company perspective, were already covered by Guilaine and Jonathan. But if I have to reflect them in the way that in the work from the auditor perspective, I would say, well, we have this critical audit matters that we need to. If you are not an emerging growth company, the identification of CAMs or the critical audit matters continues to be an area where there is a lot of complexity. Some of the issues that Jonathan mentioned a few minutes ago about impairment, or because of the current COVID environment, are items that usually end in this critical accounting matter discussion in the audit report. So PwC standard requires that the auditor will identify and include in the report these critical audit matters. That is just and it's a very detailed process that requires active participation of management and audit committee to ensure that the appropriate matters were identified and were disclosed in a way that is consistent with the financial statement. On average, in our experience, it's common to identify 2 CAMs per engagement, with some engagement having only 1 CAM and others having 3 or more, especially if there are non-recurring items such as acquisition or impairments. So it's important to engage in a dialogue with the auditors about matters that could potentially become a CAM early in the year. Seek understanding of the auditor timeline to ensure that you have a draft of the CAM with enough time to have internal conversation. So you need to integrate all this process in your reporting process. The other item, which is again is a recurring item, is review controls. So these are controls where, for example, the control operator prepares and document, another controller operator just review the documentation that's been prepared. Review controls are important because they are almost always part of the control activities associated with significant risk. Business acquisitions, impairment, those areas usually have some type of review control associated. So this is also a topic where the SEC rules for company and SOX programs are pretty much aligned with the PCAOB requirements. The main reason why there continues to be challenges in this area is because sometimes there is limited evidence on how these controls were operating. So when you perform your review, you ask questions, you identify errors, you ask follow-up items. So this provides evidence that your review is performed appropriately. So you should take some time to document all this and prove that you are doing all this good work and it's part of your documentation. There are plenty of examples of what a good documentation looks like, including intermediate version of your documents being reviewed, minutes of the meetings, emails asking for questions, or follow-ups, proof that you identify errors and you ask for them to be corrected. So my advice on this topic, because it continues to be a topic that is recurrent from audit perspective, is engage early with your auditor in the identification of this review control. Other element that Guilaine also mentions, cybersecurity risk, and it is a risk for the company, and therefore it ends up to be a risk for the auditors as well. And it affects the internal control reporting framework for our financial statement, because first, the frequency and complexity of the cyber attacks continue to evolve, and management and the auditors are required to consider this as part of their risk assessment. And also, it's important that management have control associated with what happened to prevent and what happened when a situation happened. I think Jonathan explained a little bit on what was the enforcement action we had last year on this topic, but the risks related to cybersecurity also continue to evolve. So technology continues to evolve, and the risk also continue to change. So organizations had to significantly change their working practices now during COVID, and that is actually heightening the risk of a cybersecurity attack on the company. So even when an incident may not have impacted financial systems or data, it is important to evaluate whether the root cause is attributable to a reason that could impact the financial statements, and therefore will impact the internal control of financial reporting. It is also important to consider the costs that need to be accrued related to cyber incidents, which could include customer remediation, legal fees related to forensic investigation, or regulatory assessment. And finally, not less important, I think, is group audits. So COVID also changed the layout of how we perform group audits. So PCAOB standard require that there's some minimum requirements for a group engagement teams involved in the work of the component auditor. So this includes obtaining an understanding of the component auditor, involving in the risk assessment of significant components, and performing required communication among others. So when performing audits of entities with operation in multiple jurisdictions, concluding on what is considered to be sufficient involvement require a lot of judgment and from the audit team, and this adds and COVID had added an additional layer of complexity. Travel restriction, domestic and international travel restriction also affects, because in the past probably I was just jump on a plane, went to Brazil, sit down with a component team and have a conversation. Now all that conversation have to happen on a virtual way. And there is also changes in the regulatory environment, which the corporate auditor need to understand what is happening at local level. And because of all this environment, there's a lot of changes happening in this sense. So there's a lot of more challenges now when dealing with group accounting, so group audit. So it is important that also there is a proper plan in place between management and the auditors early in the process to ensure that all the key locations are covered as part of the audit.
Yeah, we have a question here from Jessica Hitomi asking about home office, like the concept of working from home. Has this had an impact on auditing of FPIs and replying to SEC questions? And has there been any, I guess, flexibility in the deadlines? I think in terms of deadlines, unfortunately, there's been no flexibility. But and I guess that the teams have had to work. I mean, I guess we've seen probably most of a lot of the work being done from home. I don't know if you want to comment on that, like the challenge of auditors having to, having to work home office. Like you commented a bit on that, just Suze.
I think firms like PwC, we were ready to go home office at any point, right? We have the structure and infrastructure to go home office. The issue remains on the personal relationship you have, so or the interaction with your team when you are not in the same place. And also obviously visiting the operation is a big part of what we do in the audit. So I work very closely in audit of a mining company. So going to the operation and seeing the operation and being there is an important element when you are documenting what you're doing. So that restriction will obviously affect in some way. So we have to figure out other ways. So actually last year I was involved in remote inventories where we actually have cams located in the inventory or in the place, and we were monitoring those directly with in a remote way. So it's not the same. On the positive factor, I think we have seen more meetings and more discussion with management that we had probably in the past before COVID. This is because it's very easy to set up a meeting right now in a virtual way, and we are probably meeting more frequently. In fact, I'm meeting more frequently with local management in the components than what I had probably did in the past when they just wait for me to fly to the place and have the meeting. Now I probably have quarterly meetings or bi-monthly meetings, which in the past was only two times a year when I wasn't there. So there is a mix of pros and cons in this environment. I think it is important, again, to get a very fluid communication between management and the auditor and how they want to work and address. And now that the rules are changing again, so some companies are going back to the office, some others are going to a hybrid mode, and some others are still maintaining the home working from home. So it is important that this communication starts early, so we know how we're going to adapt to every. There is no one solution fits all in this case. Yeah.
And maybe, Kieran, if I may add one point from part of the question on SEC, FPI, and then what we have seen. Just a few observations from my side here is, one, it has been depending on territories and how companies and auditors were structured before. We had changing auditors during the pandemic, and some jurisdictions have very strict rules of what can be exchanged or reviewed between work papers, right? Or between information that needs to be only done physically. So some territories didn't have the virtual concept per se really well in the law, which has a couple of issues to work remotely. So we had that, So from there, do you have flexibility, timing, both for answering SEC or for the audit part of it? I think that really created challenge. The second challenge, I think that in general on all that with the pandemic in a remote environment. Back to a discussion we had before earlier in the conversation here is cybersecurity. So, and the control environment and how you set up your control environment. I had so many more discussion in the last 12 months on cybersecurity breaches or on frauds, committed somewhere, because it's a very different environment than anyone was used to work, right? So, and people are dialing from home, doing their setup at home, and so how did everything change so quickly there? So I think that's another challenge that I have and that I, keep mentioning here to people that is there. And then finally, how to respond and how to deal with. There has been some adjustment that were made on timeline with the SEC at some point when really at top of the pandemic. But in general, which is a question we got as well here is, when you get an SEC comment or a filing, do you have, what is your timing? So the timing is a timing, except if the SEC give a different timeline. And from SEC comments later, initially, usually the target for the SEC for the initial filing, when it's an F1, for example, IPO document or SPAC through an F4, for example, or S1 or S4, they target 30 days. They've always communicated that they want to try to give the responses in 30 days. And usually it's pretty accurate. It's day 30th. You may get the letter in the mailbox here at 5 p.m. usually. So, the flexibility in and there, I totally echo what Manuel said. There's pros and cons, but there's some specific and unique challenge that we have had to monitor and adjust through the pandemic, and we'll still have, to be honest, for the foreseeable future, in my mind.
And I guess, Manuel, finally, what are you seeing in terms of the future with this technology, with these climate, ESG? I guess, what do you see in terms of challenges for the audit in the future?
There is a book that I think you mentioned, Kieran, at the beginning, and you actually provided a link that I highly recommend everyone in the audience to read if you haven't done so yet. It's called 10 Years to Midnight. It was written by Blair Shepard, who is the strategy leader for PwC, and his book, he described what we define the most pressing issues affecting our society today. We group them in an acronym called ADAPT, which is asymmetry, disruption, age, polarization, and trust. All these issues are impacting how companies will operate in the future, and as a consequence, will impact how the auditors will operate. So no industry, no business, and no country in the world is exempt from the impact of these five elements. So our clients have been adopting new technologies in the past years, but this has been accelerated during COVID. Data is becoming a commodity, and businesses are generating tons of data every day. So the audit of the future is now fueled by all this data. So one of the main challenges we have today is how, as an audit firm, we are able to access this tons of data and information from our client. So PwC, we have been piloting worldwide the use of artificial intelligence to process data from our clients and highlight risks and generate alerts in real time. This is also helping us to move from a sample-based audit to a population-based audit, reducing at the same time the amount of time we invest in repetitive, low-value tasks and invest more time in areas where we can add more value to the client. As the audit is fueled by data, then the skill set of the auditor is also changing. So digital upskilling becomes one important element of what we're doing to prepare auditors for the future. You need auditors that understand where the data is located, how this is structured, and how it can be organized and wrangled in a way that actually add value and provide insights to their clients. Along with pursuing new ways of using data to identify risks, detect anomalies, and surface and highlight insights, we need also to redefine the concept of digital collaboration. So we have been working on that, and we need to elevate the experience of our people and our clients in this process. And again, as Guilaine said, it's something that doesn't seem that's going to, we're not going back to where we were 18 months ago for sure. So I talk about technology disruption, but there's other topics affecting businesses such as polarization and trust. And this is where items such as ESG that Guilaine and Jonathan mentioned before, and I wanted to, the nature of the ESG is completely different to other changes we had in the past because it's originated by the market. It's not a regulation imposed to the companies where the companies have and know when the deadline is and how long they have to adapt this. This is imposed by the market. So it's market participants are asking other market participants to present information a certain way. So there's no timeline for that, right? So it's completely different scenario. So because this is a new element and it's getting a lot of attention, we are also getting requests for, we need assurance on certain of these elements. And some of the elements can be audited, others are more difficult to be audited. So I think in general, we have investment banks announcing that will focus their investment in ESG compliant organization, financial institution offering a special accommodation for companies with good ESG practices. And we also have some of these green bonds that have some elements attached to it. So all that will require also changes in the skill set of the auditors, which is also part. And the other elements, and know that we are over time, but the other element is because of this old polarization we have around the world. And again, I highly recommend to read the book from Blair Shepard. This is increasing the level of fracture we have. So we have, rather than having common practices across the world, we are now having individual regulation in every single territory. This is true for taxes, and because we don't have a common pattern around the world, so we need this extra layer to require companies to be assessing every year, every quarter, every month, what is happening in every territory and how that will affect their practices. Because you try to have common practices for your company, but sometimes those practices doesn't necessarily adapt with a new regulation that is issued in Brazil or a new regulation for mining companies in Mexico. So you need that, and the auditors, we have an important role to play with supporting the companies in that process.
That's great, Manuel. Thanks very much. I think we've arrived at the end of our normal time here. I don't know if everyone wants to say a few last words. I guess, Manuel, starting with you.
Yeah, so for the environment, and I think there was a question at the beginning around the complexity of the environment. The environment continues to be complex. It's not going to be, I don't know, it's not, there's no indication that it's going to become more or easier. So we definitely need to be prepared and participating as much as we can in webinars like this one, and the webinars you have every week in Brazil are very important to keep management updated and up to what's the most recent information available. So thank you very much for inviting me.
Thanks very much, Manuel. And then Guilaine, any?
Sure, Kieran. I started with obrigado, Kieran, and I extend that again to PwC Brazil. And I would just say everything we covered today is not specific to Brazil, and I know we had a lot of people here, so from different territories. So we covered specific to foreign private issuers mostly, and IFRS filers on top of it. Still a lot that we have expectation that will actually evolve and go on. But if I leave you with few things, as we prepare for year-end, which is always the time of the year, so we cover, right, new administration, changing in tone, comments. But with change, it's always a great time for everyone to embrace the change. So I just leave you with that. Just take that opportunity to look and embrace the change here, and look at how you can embrace it on your reporting, and see what you can change for year-end, if anything. So that would be what I leave with today.
Yeah, great. And Jonathan, any last words?
Yeah, I'll make it quick. Like the other presenters, thank you for participating and staying on and listening to what we had to say. Hopefully you found it of interest, and the resources that were at the beginning of this, I think, are very helpful if you want to dig further on anything. But maybe just as a last single item, with the new MD&A requirements, it's now's a good time to start focusing on that while you have time, and you can think about it methodically. And because this is going to be your kind of groundwork for moving forward for the foreseeable future. So it's time well invested, and the sooner you start on it, the less stressful it will be if you're trying to do this in next March.
And I know, Kieran, I said last word, but be involved. I was going to say embrace the change and be involved. All of this is evolving, and it's great. And so be involved, reach out, feedback, please, that's the best way, especially foreign private issuers sometimes are not have, much of a word at the table sometimes because there's so much to do. So just take that opportunity as well to be involved.
Great. Thanks very much, Guilaine, Jonathan, and Manuel. We have up here your emails and LinkedIn where people can contact you directly. And I guess with that, the most important thing of the day now has come to Raquel just informed me here that the chocolate goes, the person who asked most questions and gets the chocolate is Arthur Leite, so from Vinci Partners. So Arthur, well done. We'll be entering in contact with you to get your address to send you the chocolate. And now we have for those people who want the formal training certificate for local Brazilian purposes, we're going to do the survey. So we're just going to click through the you have to get 3 of the 4 questions correct that we're going to click through now. So I guess we're just going to go through those questions. I think the first one should be up on your screen now. So I guess this is only for Brazilians who need who want the training certificate for local CRC purposes. The local CRC requirements ask us to have the audience get 3 out of 4 questions correctly. So we're going to do 4 questions here pretty quickly, and then we're just going to go through them again in case you don't get it right the first time. So I guess at this stage, first question should be up on your screens now. And I guess the And I'll just leave up here as well. I think we just left up on the screen here the slides with the contacts of our presenters today, and maybe just to remind everyone, next week we'll be back to our normal time of 9 a.m. and we'll be discussing the quarterly close. And we have with us Paula Romano and Cristiano Santos, and we'll be discussing, I guess, both the tax and accounting issues for this quarter end. And I guess Paula will be giving us an update as well on what we're seeing in terms of the regulatory changes and the expectations of the tax reform here in Brazil at the end of the year. So you should be seeing in terms of the questions, you should be receiving question number 2 now. So the question is, which regulations does an FPI normally have to follow? Home country regulations, regulations for Brazilian company, regulations in Brazil, SEC regulations, stock exchange regulations, or all of the above. So what are the regulations? So if a Brazilian company is listed in the US, which regulations does it have to follow? Does it have to follow the Brazilian regulations, the SEC regulations, the stock exchange regulations, or all of the above? That's question number 2. And then I said that for those participants who are joining us from Brazil and who need this CRC certificate, we're going to go through the 4 questions, and then once we finish these 4, we're going to repeat them just in case you don't get the question correct the first time. So I guess with that, and then I guess just so as everyone is aware, the webcast we had is recorded. You'll be receiving a link to the recording, and you'll also be receiving a certificate for those who have been connected for 1.5 hours out of the 2-hour webcast. The third question has already come up here. So FPIs are listed in which country? So in terms of foreign private issuers, which country are they listed in? And you've got an option of the countries. And then I guess just to remind everyone as well, you should see on your screens, you should have a tab to show you the slides, so you can already directly download the slides of the presentation today on your computer or iPad. And there's also a tab for the publications. So there's quite a lot of publications, quite a lot of new regulation this year. So we had, I think it was like 14 different links for different publications. I think almost all of them are for free. I think there's just one, the SEC manual, PwC SEC manual that you're required to log on to the register with Viewpoint to access, but all of the other publications are completely free. And question 4 has come up now. So what is the annual registration statements for FPIs? Is Form 20F, Form 40F, Form 1, Form F3, Form 6K. So what's the annual registration statement form for FPIs called? So we have, and so this is the 4th question. And I say this is just for people who, for Brazilians who need the certificate for local regulatory purposes. So we're going to be, so that's the 4th question. And if you've got 3 of the 4 questions correct, then that should be fine. And if you haven't, then we're going to be repeating now the 4 questions. So you have the chance now to repeat the 4 questions just in case you didn't get at least 3 of the 4 questions correct. I said that under the CRC requirements, you need 3 to 4 questions correct. So So now we're repeating the questions. Question number 1's come up again, and we'll be going through that. So just going through this repeat. To repeat this. Okay. So we're just going to go. Just going through so like this finishing. So we just set out the second question here. And thanks for everyone for joining us, getting some emails here. Thanks very much for Stella Vieira. Thanks, Stella, for being with us. Marcel. And then we're on question 3. So and just the last question. So I said, you needed to get 3 out of the 4 questions correct to get the certificate. And I guess we're just on the second last question. And once we finish here, we'll wrap it up. So we're just on the last question. Also, the last question was just sent out. So what is the name of the annual registration statement required for FPIs? And you have your options of 20F or 40F, and then F1, F3, or 6K. So what's the name of the annual registration statement for foreign private issuers? So that's going to be the last question. So thanks very much for everyone for joining us. And I see some people are asking questions about logistical issues, and I guess we'll enter in contact separately on the logistical issues. Thank you very much, everyone, for participating. And I guess we're arriving here to the end of the webcast. And hopefully we'll see everyone next week at 9 a.m. to discuss the issues for the quarterly closing. And I guess with that, I think with that, as the time runs out in the last question, I think we'll just finish up. So thanks very much for everyone. And with that, I guess we'll finish the webcast for today and hopefully see everyone next week. Thank you very much.